YouTube video streaming and also the recording on Zoom, both. Okay, let me see today. Okay, record, start. All right. Uh, 2 hours. Yeah, 2 hours. 2 hours for. I have not decided how many questions there will be. I have to see how long does it take you guys to do the homework, because there's a tracking thing that track the student homework to see how long does it take to a student to do a question. So I will use that as part of the benchmark to decide how many questions there should be. Okay, but it will be reasonable, right? But yeah, if it. Mm-hmm. Mm-hmm. Yes. Oh, yes. And the things like this, right? Because the answers are recorded on our end. So a situation like this, I can always manually check the answer, right? And so if there's an issue, you can always raise that the rounding is wrong on the connect, or that you have dealt with the particular problem differently. Because a lot of times, when students deal with the managerial accounting kind of question is, when do you round? Do you round it at the first step? Do you round it at the last step? It makes a huge difference, right? For example, for today's things that we're going to learn is like cost allocation. So in cost allocation, you calculate the cost allocation base first, right? So if the cost allocation base is a fraction or a number that is not rounded, it does not come out to a whole number, then do you round it at this step, or do you round it at the very last step? That's usually the issue. So, but don't need to worry too much about that part. And your answer will be recorded, and I will always take a look manually if you raise the issue, right? That you rounded at a different time, okay? Right. So don't worry too much about that. All right. All right. So let's come to get our attention to today's class. And today we're going to discuss the fundamental of product and service costing issue. And first, okay, let's see. My thing is not connecting. Oh, sorry about that. Let me see what is going on. Let me find my clicker. Sorry about that. My daughter took my clicker away. Mama, can you get my clicker? Mommy, can you get that laser clicker? Where? Yanka took it. Ask her where it is. That finger thing. Ask Yanka. All right, so I got my clicker back. Right. So we're going to take a look at the issue of a cost management system. What a cost management system is. Oh, sorry about that. Sorry about that. Okay. So we're going to talk about a cost management system today. So what is a cost management system? So it's a system that provides information about cost of processes, cost of products, and the cost of services. Basically, what it means is provide you a systematic method to calculate how much resources that you have put forth to make a particular product, to make a particular service. So last week we briefly discussed like pricing decisions or costing decisions, right? How do we price a particular product, right? And we look briefly various methods to calculate how to price a particular item, and we realized the information that the part of the information that's very important is we have to manage the cost, because if the cost is not managed, decision maker, then we may price our service or our product incorrectly. So that's what we are trying to do from this point on, today's lecture and next hour's lecture, and even for the Thursday's class, we're going to take a look at three main type of cost systems. Okay, so cost system, what it does, my clicker is not working. Okay, so it accumulates and reports the costs that are relevant to the decision that managers make. Earlier, last week, we talked about, for example, pricing of an iPhone. So right now, if we look at an iPhone, we tear it apart, we know that my iPhone is made up by various parts, right? But does add up the cost of those various parts, right? Add up to the full cost of Apple's iPhone? No, right? We must consider there are other parts of the entire Apple corporation that must be allocated to the cost of this iPhone in order to make sense of it. Apple's paying what? Apple Bus, right? You know what Apple Bus is? They bus people around town to go to Apple headquarters. So that's the Apple Bus. As an Apple employee, you can take Apple's own public transportation system to go to work. That's Apple Bus, right? So Apple's headquarters, very beautiful headquarters, like a big circle. Well, there's construction cost in it, right? They're building a new headquarters. Well, somehow the cost they are used to pay for those construction has to be allocated somewhere, somehow, in the product or service they sell in order to recoup that. Or otherwise, Apple would just go belly up because the money they make is not enough to sustain the money that they're spending, right? So not only that, right? We know that every iPhone, they have an operating system sitting on top of it, right? What's it called? iOS, right? So there are hundreds of programmers programming.iOS, right? On top of that, there are R&D costs to consider, right? That must be recouped when we're selling the product, so we can sustain the future R&D, right? Or recoup past R&D expenditure that we spend on our product. So if you think about it, really, costing information, they contain a lot of information that we need to consider. So sometimes they may have so many things, so many items in an organization that we lose track of something, right? So that's what a cost management system is. How do we accumulate all this costs and consolidate all these cost items into a pool or into a category so we can assign this cost or allocate this cost to our product and services in the end of the day to turn a profit for our company, right? So now we can see that there's a lot of information to track. For example, you see costs with the process organization to use to meet the customer needs, to serve the customer, or even to comply regulatory and the tax authorities is part of the cost that they have to pay. So you see, Apple uses accountants, not only internal accountants, but also external accountants. So they pay auditing firms like Deloitte Touche, right, or KPMG for certain auditing services, and those are costs as well. And how do we categorize those costs? Right? So it can be reflected in part of our product and services. When our product and services are sold, we know eventually some portion of that contribution will goes toward, right, make our ends meet in this case, right? So the main text of cost management system is indeed cost allocation, right? So don't take this cost allocation lightly, because the exercise that we go through earlier, it basically already told you how potentially complicated the cost allocation can be, because in a big organization, there are just so many costs, right, that we have to keep track of, right? And so a good cost management system should be able to track those costs. Okay. So what is cost allocation then, you may ask? A good example that start thinking about cost allocation is this, just like any joke. Start with three guys walking to a bar. Right. All right. So three guys walks into a bar like that. So what do? They drink beer, they order a bunch of appetizers, right? They get a picture perhaps, right? And they got some like chips and salsa, and they got some wings. What other can they do? Oh, they got bought a round of drink for everybody in the bar because they just won a lottery of $500. They feel rich. Yeah, okay, they feel flush. So the question is, how do we split the bill among the three of them? How do we split the bill? And we ran into this problem all the time, right? You go out with your friend, and how do you split the bill? Right? The easiest way is based on food consumed, right? So if you order this, you pay for it. While in this system, it may not work, because if we order like pictures of beer, yeah, it's just, I don't consume everything in that picture, right? So it's supposed to share among the three of us per head, right? But then the problem is that, no, I'm the designated driver. I don't drink. I'm not responsible for that alcohol portion of the bill, right? But then the problem is that you ordered something else. Oh, it be traced to you. And not only that, you make an argument that you guys are supposed to pay me because I'm a designated driver. So, you see, the costing information, how do you allocate a bill, can be quite problematic. Or sometimes you may have some alternative measure. Oh, you're rich. You won that $500 lottery. You're supposed to pay for everything, right? Is that a good way? Oh, because this department is wealthy, so this department pay for everything, right? Does that make sense? It can be. We don't know, because in reality, it happens all the time. One department is making money. It's we call it the bearer of the flag, right? So that department is supposed to ram into the market and take the rest of the company into that new market. So that department is making money. It's supposed to contribute to the whole survival of the firm. So it makes sense. But sometimes you may think, oh no, we have to think of certain other ways, or if it is how much labor is consumed, or how much machine time is consumed, right? The various methods that one may think, one may look into a particular problem of this. Three guys walks into a bar. Right? One may even think, oh, let's make it scientific. Let's measure the girth, right, of the person's waistline. So the wider the girth, the implication is that you're going to consume more food, right? So therefore, you are responsible for a bigger portion of the bill. Is that possible? Yes, it could be. But the question always comes back to which one makes sense the most. And a lot of times the accounting students, they always want the professor to tell them that one right answer. But in situation like cost allocation or the majority of cost accounting questions, there's no one right answer. Just get that out of your head. There's no such thing. A lot of times things like this, right, you have to make your advice to the client based on the situation, based on what is asked, right? So if the manager want to look at cost categorized in a certain way, we provide information like that. Sometimes we allocate the cost, based on a particular method for this report, and based on the next reports managers need, we may allocate the cost differently because they have to look at the cost with a different structure. So that comes back to our first thing we discussed in this class. What makes a good accountant is the quality of your advice. Are you able to justify your cost allocation method? Are you able to explain it logically so people understand what will happen if a cost allocation is made one way over the other? So in cost allocation, we know that's what we are trying to do. But there are, like we discussed already, there are several potential problems with cost allocation, right? Costs will allocate to cost object on usually somewhat an arbitrary basis. We say that earlier, the three-guy problem. Per head, the girth line, or how rich that person is, or on the how much the food is consumed, right? So okay, yes, we ordered some wings, but I've been keeping track. You ate 10 wings. I only had one. She had 2, right? Do we go that far to track consumption or usage, right? If we really go that far, would it be too much trouble, right, to ruin the fun of the night? Someone is keep tracking, logging everything, but it can happen. The same thing with the cost, the allocation system, that sometimes that we may spend too much effort in collecting the cost. And then, of course, if we use this cost allocation information that not carefully, it can also result in misleading information and poor decision making. Right? Okay. Right. So at the end of the day, one question is, okay, once we allocate this cost, okay, we say, okay, this department is responsible for X number of costs based on our allocation method. The iPhone department, okay, we allocate costs to X number to iPhone department. iPad department, we allocate certain costs to the iPad department. Guess what? Because they share the same iOS operating system. So the iOS developers, those programmers, right, we have to allocate the cost into either department. But the problem with this allocation is once you allocate it, the costing information is in there, right? And those information may be used for other purposes. Like, for example, deciding on who gets the bonus, deciding on how or if the department is running efficiently, right? So in this situation here, if we allocate too much cost in iPhone department, even if iPhone is doing well, because now they are carrying a lot of cost, right? Their true performance of that department may not be seen. Or we actually made a lot of money, but guess what? We carry all the costs. So it seems as if we are not making money. Now I'm not getting the bonus. It's not fair. I'm gonna quit. Okay? Information like this affects people's life, affects people's performance review, okay? Affects the perception of how a department is doing if we do not do it carefully. Right. So based on this understanding, let's start to take a look at some the cost management system and how to do a cost management system properly. The way to do a costing or cost information system or cost management system, the first to consider is to inspect how cost flows. Right? That's how we start. Okay, so if we consider, let's just take an iPhone again as an example. So we start looking at how the cost flows from one department to the next department. Okay, we have direct material, we have a direct labor, right? We have contracts, we have processes that convert the direct material into some intermediary parts, and then somehow we pay another company, right, Foxconn, to assemble all the parts together, and then now we have the product. Now the product is shipped all over the world, ready to be sold. Oh, so we kind of inspect this information very quickly in our head, right? So we realize that there's a flow of dollars, right, for different parts, different services, right, and then also flow of the actual goods. One thing in cost management system we have to realize is the flow of the goods and the flow of value can be completely separated. Completely. How does that work? Imagine, in United States, you have state of Nevada, right? Okay. Nevada has no corporate tax, right? And also Delaware have no corporate tax. So what the state of Nevada and the state of Delaware like that is those are the states are hotbeds for shell companies. Why? Okay, so that's how it works. Let's say if I set up my corporation here and I have goods shipped to me, okay, and then I pay for that company and then I sell my goods from my California corporation here, I'm responsible for corporate tax in California, right? But what if I set up my corporation in Nevada or Delaware, right? It doesn't really matter the goods flow to me, right? But the value, the dollar flow to the corporation in Delaware or Nevada, right? As if a Delaware corporation or a Nevada corporation is controlling the goods. It doesn't really matter even though I'm operating out of California, right? So in this case, what happened? I don't need to pay corporate tax because guess what? It's a Nevada corporation or Delaware corporation. Okay, so when you consider cost flow and cost allocations, one thing that is very important for us to understand is that we have to separate the flow of goods and the flow of value, looking at differently, okay? And when we look at cost flows, I want you to focus on the flow of value, right? How does the value flow to one place to another? Sometimes the goods can remain in one location, right? Does not even move, right? But the flow of value has changed hands into various parties. Like one most criticized area of Apple's operation is that the flow of goods actually just moved from China to United States, that's all, right? But the flow of value have traveled all the way around the world to EU, to Ireland, to Dutch companies. Why? Because they try to avoid taxes, right? So Apple, if you look at the company, they have a lot of cash. Why? And they pay very little taxes because they keep those money, they keep the revenue not in the United States, in those intermediary companies, right? So even though the flow of goods only physically move from China to United States, right, the flow of value, right, has changed hands, changed different companies, right, throughout the world. And how this problem work, we're gonna examine in a later part. It's called a transfer pricing issue. It's very, very interesting. But the concept is from here, how the costs flow and how we allocate the cost. So if we look at cost flow, a very easy way to look at it is look at the direct material, direct labor, and the manufacturing overhead here. So now the three cost pools here, right? So there are two products, alpha product and beta product. So the cost allocation is the science that, okay, how much of direct material goes to alpha, how much direct material goes to beta, labor, how much do we assign to this, how much do we assign to that, and manufacturing overhead, one way or another, we will allocate it to alpha or to beta. Okay. So usually, how do we allocate it is by come up with some kind of logic. What does it make sense? If, let's say, alpha and beta, this company is labor intensive. Okay. It requires people to put together the product. It takes hours and hours of work, right, in order to make it happen. Then, in that sense, we may be able to do it here, like say here, allocated by direct labor cost, right? So if this product takes 50 hours, and then on top of that 50 hour, these are high skilled labor, right? So alpha's labor cost is much higher than beta's labor cost. We may use that labor cost as a way to allocate manufacturing overhead, because alpha is a much involved product for us to manage it, to make things work. So things like electricity, security, rent, insurance, right, should follow this logic that alpha should be responsible for more of the cost, because at the end of the day, we want to make sure that alpha can recoup all these costs, right? Because all the dedication and effort put in to put alpha together. Okay, so we understand that cost allocation is often based on the analysis of cost flow, right? If we, by looking at this chart, we observe how direct material flows to alpha or to beta, and direct labor, same thing, right? Okay, and then we can make a judgment on manufacturing overhead, how it flows to each one of them, right? Although we're just looking at this in a very simple method. We are not thinking about whether it's manufacturing overhead or just management overhead. We are looking at period cost or not, but the idea is the same. We analyze the cost flow to determine a logical way to allocate it to different products and services. Okay. So in this graph is here that the indirect, okay, manufacturing overhead is allocated based on direct labor applied, and like we discussed earlier, right, it can be other method. It's not always direct labor applied. And for the Accounting 101 student, the first accounting cost accounting classes, the way students learned it, they think, oh, I saw this test question. They use direct labor rate to allocate the cost, so that's what I learned. That's what I'm gonna do. No, that's not what an accountant is supposed to do. Analyze the situation, right? See what the question is asking and determine the allocation rate. How you're gonna allocate, right? It's one size doesn't fit all. Right? Sometimes you use alternative method for this situation. So like I said, it's also possible to use other allocation methods as well, right? The important thing is that you provide a justification, and reach a consensus in your organization that this is a cost allocation method for a particular situation, right? Okay, so you see, if the situation is to determine the sales price, you may use one allocation method in order to come up with a sales price that makes sense, right? But when it comes to determining, right, the bonus allocation, you may use a different allocation method, right, for doing that. All right. So the consideration for when it comes to cost management system, there have been quite a few. We need to understand how will the cost information used. Right? Earlier we talked about already whether it's for pricing information, okay, for performance evaluation, or for budgeting. They may motivate the accountant to use alternative method, or alternative perspective in determining how costs are allocated. Okay. So they should have, very obviously, a decision focus. What type of decision are we trying to make? Okay. So we already go through this. Yes, there can be more than one way to allocate cost, even though that you are using direct labor for one situation. Okay? In another situation, perhaps you can use other method. Okay. Right. An important thing here that I want to highlight is this one. The cost information must itself meet the cost-benefit test. The idea of this is, yes, of course, you can come up with very complicated costing information. Like earlier we suggested, have a very, very fine-tuned tracking system to track the usage, right, of the resource consumption. Oh, you ate 10 wings, you ate 2 wings, you ate 3 wings. In organizations or in the company production line, same thing can happen. You can install smart meters to monitor how much electricity that one department has used. You can come up with a very complicated method to calculate the depreciation, how much depreciation like a product line or a department is responsible, right? You can do all that, and what happens is the accounting department gets bigger and bigger and bigger because we have to track all these different information that's out there. But at the end of the day, the question as always is, right? When we are tracking this costing information, that the salary to the accountant itself become a cost items, right? Okay. So does it justify that we're spending so much money just to figure out, right, how much cost should be allocated, right? Should it be just simpler? Because the accountants, we don't really make money for the company at all. We don't make products, right? We don't go out and sell things. We just keep tracking of things, right? So if we're spending too much money and too much resources, right, just to figure out the costing information, even though we can justify, oh, this is the best costing information, it's so detailed, we track everything down to the last dime, right? We can find out the exact wattage, right, of how much a particular process it's taking, right? It may not justify the cost benefit, right? What we really need is just a way for us to allocate the cost, right? Therefore, decisions can be made. The idea is never to make the perfect system or the most accurate system, right? Is what we're trying to do is to support decisions. So as you can see here, it can be very, very costly to make multiple cost management system and provide detailed information for every cost assignment, right? But don't do that. Okay, so when we consider how the cost flow, it goes back to the basic costing system that we went through last week. You can go re-examine the cost flow in very simple way. The beginning balance plus transfer in minus transfer out equals to ending balance. That's the most basic way to look at cost flow. We can also track it in a statement format. Write it down this way. Okay, so if you have items to add, right, you can add to this formula here. Okay, one more line items, one more line items, one more line items. Okay, so a lot of times students have trouble with this type of system. You say, oh, yeah, it's just a bunch of numbers. When do you add? When do you subtract? When do you sum up? Right. So the guideline is here. If you see a line under a number, the next line is always the sum. That's how it works. Right? And then you read this number, and the next number, there's an underline here. That means this number underneath that line is a sum, summary number. Okay, and when you reach the bottom, everything summed up together, you double line it here, right? And in this type of traditional accounting income statement method, if it is a negative number, minus number, what do? You put it in parentheses, right? In parentheses, that means this number is to be subtracted. Okay, so that's the basic formula to understand, right? So it doesn't matter if you're working for Excel or working manually, right? Get into the idea, right? When you need to sum the number up together, put a line, and then next number is the summary, right? And when everything's done, put a double line in it, okay, right? Okay, that's the format. Or you can do in the T account format. Okay, the inventory account, here you have beginning balance, and then you plus a lot of the transfer ins, you less what's being transferred out, and you end up with the ending balance. So there can be more than one line over here for transfer in that tracks the effort has gone into this process, right? For example, if last week we used the idea of lemonade, right? So if we were to make lemon concentrate by squeezing the lemon, so now we have a beginning balance of intermediate good, the lemonade concentrate, right? The raw juice, right? But how do we get that raw juice? Is by humans squeezing it, right? By some kind of filtering process that we use a filter. So there are a lot of things that go into this process in order to make it happen. So that we can track using the T account as well, right? And after every effort, every resource that is being considered, we transfer out the goods that is done, right? The lemonade concentrate that is done and consumed, and that is what we see here, transfer out. Okay. At the end of the day, then we will leave with some ending balance. Okay. And this ending balance in our scenario, maybe some lemon hasn't been filtered yet, right? Haven't been completely cleaned or frozen, right? So some of these things may not be 100% done, right? So that's why we have an ending balance in here, not transferred to the next department, because these may be not finished yet. So that's what we call if we use the cost flow, we are able to track to see whether or not this ending balance is done or considered, not yet finished, and usually we have some way to figure out or then exactly how much you have done, right? So that comes to our next slide. Consider the work in process item and cost allocation. Okay. So if there's no work in process inventory, the cost assignment to each unit can be easily calculated as this. The total manufacturing cost, and all these add up together, right? The total cost of material, labor, and overhead for that period of time, and divided by the total quantity of output for the period, right? If there's a work in process item, no intermediate good. Why? Because everything we put in there, they make finished goods. That's it. Nothing in between, right? Because when we have something in between, intermediate goods, that means, right, these still require resource to put into it to finish that. So consider if you are making a bicycle, okay, you are making 10 bicycles for your father's company or your cousins, whatnot. So making these 10 bicycles, they gave you 3 months of time to make that 10 bicycle. Okay. So whenever the bicycle is finished, and you can transfer it to the finished goods account, right? But at the end of the first month, if you are still working on the 8 bicycle, right, they are maybe at various stage, right, of completion. Now it's a problem, right? And then how do we account for the value? How do we account for the cost that, oh, these 8 bicycles, they are only 20% done. I still need 80% more effort into making it complete. So some of the electricity that I'm going to incur next month, right, have to go to that 80% to make that bicycle complete. And some of the labors that we incur next month have to go to these, okay, half-finished bicycle in order to make it complete. So that's the problem that when we see, okay, try to evaluating if there is a work in process item and allocating the cost, because it's not easy as when we consider that everything we put into it will be done and transferred out. So that's what we hear. Okay, if everything is done, then it's easy, right? Just total manufacturing cost and total quantity of output. Right? But if it's not that way, then we have to consider how to allocate the cost into the work process items. So costing with the ending work in process items, okay, involve in the idea considering that they are not done yet, but we need to consider how much it is can be seen as done. That's when we see then use the term equivalent unit. Oh, these bicycles are 20% done, so logically I can say the 8 bicycles 20% done, there would be what? A times 0.2, 1.6 equivalent units. So I can consider that I can allocate the cost to this 1.6 units instead of 8 unfinished bicycle, right? So that's how WIP or cost allocation is done. So the secret of here is the math of calculating equivalent unit. So let's go through this example. Let me get my writing board up here. Oh, here. My pen. Says in April, Chewbacca Lemons Incorporated start and complete the production of 90,000 gallons of lemonade. Total manufacturing cost incurred in April was $990,000. Okay, they start and complete it. Right, right. That's a key word here. Right, we know. Wait, so something wrong with my pen. Let me adjust my pen setting. Can you guys hear that the lawnmower outside? It's really loud. It's like it's super loud here. I'm already wearing my headphone. I still can hear it. Okay. So we're looking at here. So we know that start and complete 90,000 units. We also have this information, the total manufacturing cost is $990,000. Okay, any more information that we see? There was no beginning inventory in April. At the end of the month, 20,000 gallons of lemons were still in production. They are considered 50% finished. Where's my... Right, so we know beginning inventory, you can say BI or BB, doesn't matter, 0, right? And the ending inventory, ending balance is 20,000 gallons, 50% done. Right. So the idea right now is to apply them to the cost flow. So let's take a look at the inventory cost flow here. Let's put the information on here. Beginning inventory 0, transfer in, TI, transfer in. How much do we transfer in? You guys see? Over here. Right? That's the dollar amount, right? And now we have an ending balance 20,000 units at what? 50%. Okay, so we track this way, but the problem here, as you can see, is at first, these are what? Unit of calculation. These are units, right? Not in dollar amount. We don't know how much dollar amount it should be, and also we do not know, okay, how much this per unit cost should be allocated. That's the problem, that even though it's 20,000 units at 50% completion, there's no way we can put this number onto our book because we don't know what value does this 20,000 units represent, right? And also in the same time, even that we transfer out, we have 990,000 units done, okay? How much is this value-wise should be allocated to this portion, the start and complete portion, right? So that's the problem. So if we think about it, yes, we have units here, but this is units. It's not dollar value, right? So we have to make this unit representation into dollar representation so we can enter into our accounting book, right? So last week we discussed the presentation of accounting numbers. So this is the area that you have to watch out, right? We went through the idea treating a ratio number as a ratio number, right? Treating a dollar number as a dollar number, a percentage as a percentage. Same thing here. The most common accounting error students make are this. They write it here, oh, 20,000, so they messed it up with this. This 20,000 is unit, not dollar amount, right? You see? So, 90, okay. So that's why a better way to do it is to track the flow of units separate from the flow of dollars, okay? So how we do that, let me see if I can move this up a little bit. So you said this is a unit flow. This is a cost flow. Okay? In unit flow, we know we start beginning balance with 0 units, right? And then we transfer out minus transfer out, right? We transfer out how many? Start and finish, 90 units, right? And then we have ending units of 20,000 at 50% completion. So we understand this 20,000 transfer to 10 thousand units, equivalent units, right? So now let's take a look at cost flow here. The beginning balance is 0, right? We complete and transfer out. The total manufacturing cost transfer in is what? 900. This way. That's all the total manufacturing cost incurred in April. Then transfer out is 90 units, 90,000 units, right? But we don't know what that number is dollar-wise. And we also don't know the ending balance, how much this 20,000 represents, right? So using what we have, the information we gathered here, we know the total manufacturing cost we incurred is $990,000, right? And total units in production that we produced and complete is this 90,000 plus the equivalent of 10,000, that is start and complete, right? Even though there's 20,000 left in our ending inventory, but we consider that 50% down. So let's say 50% down, that would translate to 10,000 units. That the whole thing gives us 100,000 units. That gives us a per unit at $9.9, right? And now we can use this 9.9 to allocate the cost over here. Translate this $90,000 to the value transfer out, and this 100,000 units value as the ending unit. You see? Right. So idea is, what's the unit flow, and then consider what's the cost flow. See? How much effort or resources, right, spent in period, how many units are considered complete. And then 5, we take the resources, total resources over complete units, we get the allocated per unit rate. Then we can take this number to figure out the cost flow. Okay, that's the technique. I know some of you may think this is too easy, right? But it's important for you to understand the process. So the mistake of treating the unit number, the quantity, and then the dollar value differently, right? So you won't make the mistake adding 90,000, oh, over here, I'm sorry, adding the 990,000 and with this as the same number. Trust me, this mistake like this happens all the time, literally all the time. Right, so far so good. Let me see how many slides I have left for this. Yeah, I still have quite a few slides. Let's take a break. 10-minute break. Then we'll come back to finish this chapter. Go down. So that's just figure out the 90,000 gallon transferred out. What's the value? Okay. Oh, okay. Those steps over here? Huh? My telephone 然后那个 connecting 我通了不透的，哪知道？Ginger juice. You drink all. So I need a new one. Can you give me one? What?
You got the old cooker.
Yeah, of course.
Why not that? Sorry, there. Fire. Kubi. Fire. Fire. Mungu. So. きれいみたいな電話があるんです。 好的，完成了。
So let's come back to class. So before we move on, I want to ask you guys, how's the pace? Is it too slow, too fast? Let me know. Too fast, too slow, just about right. A little fast? All right, okay, I'll try to slow down a little bit. Yes, we will. We will go through some practice questions today. Yeah, because from today's material, right, there's more calculation involved, less conceptual. So we will start doing the workshop mode and to go through the practice questions together. That's what we're going to do, right? Okay. So let's start. So with respect to cost allocation, earlier we discussed the concept of allocating cost to perhaps different product lines, more than one product line. The information we're seeing is like this. When there are more than one product line, we want to allocate the manufacturing overhead, use some kind of allocation method, allocation base, right? To allocate to these two product line here. As you can see here, direct material is considered a direct cost that we can assign or trace to either cost object. And direct labor, we can also do that. And the manufacturing overhead here, we need to allocate that manufacturing overhead cost to either product lines here. And in this, okay, we have decided using the allocated by a direct labor hour, okay? How much time we spent on each product line is going to determine how much manufacturing overhead we're going to allocate to either product line here. So the cost system determines the cost allocation base. In this case, the allocation base is the direct labor hour. So some of you may have that question, okay, asking what does that mean, allocation base? So let's write it out, allocation base. Okay, it's very simple. Mathematically, look like this. Okay, the MOH going to be allocated, right? Divided by what? These are the direct labor hour. That's what we call the allocation base. Okay, so when you think about allocation base, visually think this way. That's what it's gonna look like mathematically. Oh, based on direct labor hour. Okay, so when we imagine if there's 20,000, okay, manufacturing overhead to be allocated. Oh, we need to separate out one to this and one to that, and one product line, let's say 150 hour, and the other product line is 50 hour. So total, we have consumed 200 hours of direct labor hour. So that is what we meant by the cost allocation base. Based on these, then we can assign how much of that 200,000 goes to this product line A, and how much of this $200,000 goes to this 50-hour product line B, right? It is based on labor hour, right? So in this example here, we understand the cost allocation base, right? When we determine the cost allocation base, we can determine how this management overhead going to be split. And we also understand that the concept of if a product line consume more hours, so if we're going to start a product line C, okay, based on this allocation method we have here, what is going to drive the cost of C is what? The hours spent, right? So that is also can be considered the driver, the cost driver, okay? So when we discuss the cost allocation base, the concept is closely related to the cost driver concept. It drives the cost up and down, right? Because we are using direct labor hour as the cost allocation base. So if the hour goes up, more cost to be allocated. Cost go down, less, right? Cost to be allocated in that category. That is why we also call it the cost driver. Okay. So if this is the case, let's take a look at these two product line here, S72S, S66S. The unit produced 80 versus 240, right? So we produced 320 units in total. The direct labor hours spent, we spent 240, not 240, 2,400 labor hour for 72 line, and 3,900 for 66 line. Totally, we have incurred 6,300 hours of them. And the cost information, we already laid it out, the direct material, for each one of them, the direct labor, now the manufacturing overhead, 252 here. The problem is here, we don't know how much goes to 72 and how much out of this 252,000 goes to 66. We don't know. right? So now what information are we using as the allocation base? The direct labor hour, right? Okay. So in this way, there are several ways to calculate that. We can use a proportional method. We know 252,000. No, we know some of it goes to 72S, some of it goes to 66S, right? And we have used what as the allocation base? Direct labor hour as allocation base, right? So mathematically, we can do it this way. 252 times 2,400 out of 6,300. That will goes to where? Which one? Yeah, it goes to 72, and 252 times out of 6,300 goes to 63S. This is what we call a proportional method. Okay, proportionally, how much does it go to one and how much goes to the other? We can also use a unitized method. So for unitized method, we do it a little bit differently. We know 252,000 is to be allocated, right, based on this allocation base. So we divide that. What we get is the rate per hour, right? We can figure out the number of the rate per hour. So if we take this rate per hour times 2,400, we get the 72S allocation and the same rate per hour times 3,900, we get 60S allocation, right? Okay, so do you guys see that? It's a proportional method and a unitized method. Mathematically, they do the same thing, because you see, when you do this, right, mathematically, you can move this 6,300 over here on this side, divide it over here, and times 2,400. It's exactly the same, mathematically speaking, right? But some students prefer to understand proportional method, and sometimes in managerial accounting processes, it may be easier if you calculate the unitized rate first, and you can identify that as the rate per hour, right? And use this rate per hour to do the calculation in other steps, right? So far so good. So try to use DLH, allocation base, to find the allocation per hour. Right. So the question is, if we use another method here, instead of direct labor hour, this one we see here, we are using the DL dollar amount used. Will it produce a different number of cost allocation? It will. Why? Because you see, we are allocating proportional wise is 2400 versus 3900, right? And here is 72 versus 78, right? Okay, they will definitely produce a different number, right? So be careful, because sometimes the question will ask you use the direct labor hour as a cost allocation, so you have to use the hour, right? But sometimes the question may ask you use the direct labor rate over here as a cost allocation base, right? So of course it will produce a different result based on the two allocation method. All right. All right. So far so good with this allocation. All right. Next one we want to take a look at is a two-stage allocation system. It's a little bit more complicated than the first one that we see. So if we see this graph again, we have direct material, direct labor, and the manufacturing overhead to allocate, right? But then the argument is there's so many type of costs in manufacturing overhead, right? And some cost pools that are perhaps labor intensive, and some cost pools that are machine intensive. So if we are going to allocate, let's say, depreciation cost, we bought a machine. Remember last week, the Chewbacca, they bought a very expensive juice making machine, right? Say $200,000. It's going to be used for 10 years. Assuming there's no residual value, right? Each year we will consume $20,000 of that machine, right? Over a 10-year period of time, right? So what that means in our income statement is that every year we spend $20,000 instead of just $200,000 by the machine. No, $20,000 this year, $20,000 next year, $20,000 next year, $20,000 next year. Right, that's the nature of what how depreciation works. So this depreciation cost is considered type of the overhead, the manufacturing overhead shared by all different juices. Right? So you may think, oh, some things that we do are machine intensive, right? And some things that we do are labor intensive. It doesn't make sense to use direct labor hour to allocate that cost that are considered machine intensive, right? So in this case, we may need to allocate, use different pool, and that's when two-stage allocation system work, right? So as you can see here, the manufacturing overhead is separated into a machine-related cost pool, a labor-related cost pool over here in the first stage, right? That's separate the cost pools. And we know that these both cost pools have then further allocated, right, into different products. So it's machine-related cost pool, right? We consider that things are machine intensive, right, need to be allocated more. And things here, the direct labor related costs, things are labor intensive to be allocated differently. So if we are using this logic, what are the cost allocation base we should use for each pool? For the machine related cost, would it make sense that we use direct labor hour as a cost allocation base? That would probably not, right? Because the information produced would be misleading, right? Because now we are using this labor hour to determine the cost allocation method for machine, okay, hour driven type of cost. Let's say consider product A and product B. If product B take a 3 machine hour to work and product B only take a 1 machine hour to work, logically product A should be allocated more of the machine related cost, right? vice versa. So now we can see the machine-related cost, most likely that we will allocate in proportion to machine hours, and for direct labor-related cost, we will allocate in proportional to the direct labor hour, because the logic driven in this cost allocation is to see what type of resources are consumed, right? So that's what we're discussing here. There may be more than one factors involved in allocating the MOH. So we may separate the MOH into different cost pools, machine pools, and direct labor related cost pools. Okay, so each cost may have a different cost driver, hence different cost allocation base. Right? So far so good? Yeah. Right. In this case, we are looking at either by machine hour or by labor hour. So let's take a look at this example here. Right. So a lot of times when students looking at a large set of information like this, they start panicking. You know, oh, too many numbers. You know what I'm doing here. Don't panic. Just take a look at this carefully. Okay, unit produced, machine hour. Okay, direct labor hours. Okay, same thing. Direct material, same information that we've seen so far. Direct labor, okay, the rate, these are dollar amount, same thing. And the manufacturing overhead, what it gives us, right, is what? The different categories of MOH. Utility, supplies, training, supervision, machine depreciation, plant depreciation, miscellaneous. Right, so here they already give us the category of this information. A, okay, is for machine related cost. So we have utilities, machine depreciation, plant depreciation goes machine related cost pool, while we have B here, the supplies, the training, the supervision, and the miscellaneous go to labor related cost pool. Right. So now what we have is we can separate this 252,000 into two cost pool by either the machine or by the direct labor. So over here, the already calculated here, the overhead here, the portion that goes to the machine related cost adds up to $100,800. Okay, that's all the A pluses together, and all the B added up together comes to $151,200. And the allocation base, we know we are using machine hours, right, to allocate machine related costs, and we're using labor hour for labor related costs. So the method that they are used here is a unitized method. So we find out the per machine hour rate is $18, and the per labor hour rate is $24, right? And we can then use this information to allocate each category of these costs. Okay? So that's okay? Good, good, good. All right. So the information that we get here is here. Machine related costs based on $18 per machine hour. Okay. So we can allocate it into 25,200 and 75,600, and adds up to here 108. That's 108. And then labor related and 24 per direct labor hour rate, and we allocated it to each pool this way, and that's what we have here. So some of you may see, and how do we get this point? 25,200. That's from here. 1,400 we spent 72s times the rate 18. We got this. And labor related we spent 2,400 hours on 72 at the rate of $24 per hour. So we get 57,600, right? When we add this up together, we get the total cost, and divided by the unit produced, we get the unit cost, right? So that's how it works. Okay, the two-step allocation system. So the two-stage allocation system, let's write out the steps here. Where's my pen? Okay. One, determine the cost pools, okay, within the MOH, okay, find allocation base for each cost pool, right? Use either proportional method or unitized method, okay, to find cost allocated for each product line. Right? And then you can use that to calculate the per unit cost or other information. Okay, so usually students make mistake when two-stage allocation system or two-stage process. What they did is they try to calculate, okay, that's the allocate the direct labor hours first. Okay, after the direct labor hour is allocated, that's allocate the machine related cost second. So they take a step process. But what happens with that kind of method, or students usually make that mistake, is they use this number 252,000 twice. The first they allocated it is use labor hour, and then they allocate this 252 in machine hour again. So they double counted this 252,000, right? They overused it, right? So instead of separating this very first stage here, determine the cost pool, to break up that 252,000 to different cost pool, right? That's the first step one should think about when we use this type of different allocation system. Is the cost pool have to be figured out first, right? You should not just try to apply this 252,000 and take step by step. Okay, let's do machine first, then we will do labor. And that's usually when errors are made, right? You double counted this 252. Do you guys see the difference? Okay, let me see visually. Can I move this the whiteboard up? Yeah. Okay, I'll move this whiteboard up. Say this 252,000, right? So the two-stage method says that that's separated out into machine-related or labor-related, but they can be other method, right? We don't know. Just in this case, we are using separate into machine-related and labor-related. This perhaps we say is 100,000, and here we have 152,000, and then we figure out what this goes to product line A, product line B, how much inside this 152 goes product line B. Okay, that's the correct way of doing it. But usually student makes mistake in this manner. 252,000, right? So that's separate into product line A, product line B using the direct labor. And then again, they take that same number, use machine hour to allocate this into product line A and product line B, right? So they double count the 252,000. That's the problem most students make in the two-stage allocation system problem. Okay, do you guys see the error? Okay, it's very, very common. I've seen this type of error over and over. Okay, so there are other costing system here. We will get into more detail. In the next hour, we're going to talk about the job costing system. Okay, and we're going to talk detail about how job costing system work. And there are also process costing. Process costing is also, we'll be taught process costing on Thursday. And process costing is probably one of the most challenging area before the midterm. So make sure that if you have time, start looking into process costing. Okay, before Thursday, if you have time, take the time tomorrow, practice today's or tomorrow, and use the weekend to focus on process costing, right? Because process costing will be hard. Okay, it's not easy. Right, so quickly, the job costing usually consider the accounting processes for a job, like construction job, consulting job, or design, websites, all that. And process costing is usually used for identical products in a continuous, uninterrupted process. Making milk, you're just making milk, uninterrupted. So at the end of the month, what do? You don't stop the production line and say, okay, this month, how many we made? No, the production line keep making the milk, right? So you have to determine, okay, this is December 31st, how much we have gone into production, right? So that's process costing. It's continuous, right? And there are also operation cost. Operation cost is a hybrid between job cost and the process cost. It's an identical or shared process, okay, among different products. Like, for example, making cars, right? There are a lot of identical or shared process when making a car, but they are for different product line. Not every product is identical. So that's what we call the operation costing. So that this concludes the chapter for the cost management system, right? I know it's a lot to take in, and I don't blame you that if you have forgotten what you have learned in 101. And I actually like the opportunity to have student review or to be taught the right way by an accounting professor. Right? A lot of times when you talk at the 101, the audience is students from everywhere. Some marketing students, some finance students, right? They don't learn it like what an accounting student is supposed to learn. If I taught them exactly the same thing, I would lost like 90% of the class. So, yeah, I'm glad that we had this opportunity to regurgitate, to go through these concepts again. So if you find this concept, you already done it very well in 101, good for you, right? But I believe that there's always chance to learn a bit more or learn the accounting way of looking at these things. Okay? Right, so let's take another break, come back at 8, and we'll go to the next chapter. Okay? All right. I'm gonna get something to eat. I'm hungry. Lower. Like that? Okay. Right. Did you guys follow the news that New Zealand has already eradicated COVID-19? You guys see the news? Yeah, there's no case anymore in New Zealand. Yeah, I think it's quite amazing. But yeah, maybe easier for them because it's just such a small, remote island. The population is only like what, 4.5 million people in the entire country. Smaller than Seattle. Seattle have more people than the entire country of New Zealand, but it's still quite a feat. How they did that is they locked down the country 90% for a month. Right? They can't go out. The country's locked down, and people just, just brace this entire process. And now, 2 days ago, they just announced the last COVID-19 patients out of the hospital, so they have no active cases in New Zealand anymore. I think it's quite amazing. It's probably impossible to do in the United States, right? Some county, this county, you cannot go out. Next county is fine. So you see that the picture is right there. The beach, right? The county line, this side of the county is nobody on the beach, and next county, it's people's on the beach. So you do it half-ass, of course you can't get to the end of it. And some of you may be interested to know that the case in California has risen again. So we don't know when it's gonna end. And for any one of you has not caught COVID-19 yet, right? You may be a potential patient sometime down the road if you're not careful. So the best advice that I can give to students: be vigilant, careful. If you go out to mingle with other people, go to the protest, it's fine. Just protect yourself. The students here, do you guys know one of our very respected professor, Professor Teresa Hammond? Yeah, she is very respected in our school. She is very, very big on the equality and the Black Lives Matter issues. And she has even published a book, documenting Black accountants. Yeah, she did that. And she's, some people may consider her as the East Coast elite. She used to teach in Boston College, very, very good school. And she's now here. And she participated in the protest as well. She said, "Oh, I'm off to a protest." Yeah, I was talking to her some time ago. She told me about it. It's quite interesting. All right, so then this chapter 7, we're going to talk about job costing. Okay, so chapter 6 is way more important because we lay the groundwork on costing system and how cost allocation work. And for the next few chapters, when we talk about job costing, process costing, or ABC, the activity-based costing, they are just variations of costing system, or cost management system meant to allocate the cost, right, into different department or different product, right? So the basic concept is the same. How do we treat those costs, manufacturing overhead or labor cost or indirect cost? How do we allocate them, right? And always we have to start, usually, to separate the flow of units and the flow of value, right? Look at them separately so we can understand the cost flow. That's the basic concept. It doesn't matter when we are looking at job costing, when we're looking at process costing, or ABC costing. The idea is exactly the same, right? How do we separate them into a reasonable or logical cost pool? Or how do we allocate the cost now from the cost pool, right, into different product line or different product or different department? So that's what a cost management system do. So in this chapter, we're going to get into one of the costing system we discussed earlier in the hour is job costing. So if we want to understand job costing, we try to understand what is a job from the accounting perspective. So I guess most of you understand this concept. You have one job, right? FIRE instead of FRIE, whatever. You have one job to do it. Right? That's our understanding of a job. But in accounting perspective, a job, okay, is defined as a distinct unit of product or service. Right? And it's distinct in one way that you usually have a definitive start and date. The job starts at a certain time and at a certain date, right? We start doing this service for a particular client, and 3 months later it's done. Has a distinct start and end time. Like this job here, the job is distinct, right? Just paint that FIRE on the curve. Okay, you start in the morning and finish at night, right? So it's distinct. And have a distinct processes and documentations that record the cost of the job. So we can see, okay, if we're going to do job, oh, I'm going to drive to that job site. Oh, I'm going to mix the paint. Or I'm going to make things, and I'm going to start out the machine and burn those letters onto the curb side, right? So very distinctly, we can trace the cost, right, into this job, right? Because it's very logical. They are so distinct, and then we can document our process. Oh, this is how the cost flow towards this job, right? It's quite straightforward. So in like this example here, oh, okay, we can very quickly, right, very logically identify what resources belong to this job and what resource does not, right? So a firm can usually run multiple jobs simultaneously. Like for example, a law firm, right? The law firm can take multiple cases in the same time. Oh, for this case, we're defending this murder. For next case, it's a civil lawsuit, right? To figure out between husband and wife who owes who what, right? They can take multiple cases in the same time, but yet in its own unit, we are able to see how many hours of service or how many papers that we copied, right? Okay, that belongs to one job versus the other. Okay, so examples of jobs, like for example, mowing a lawn, right? We know what this job entails. Start that machine, add some gasolines, and you start 6 o'clock in the morning and finish by 9. You put 3 hours in the work, and you deserve some beer and $50, right? How many of you did mow lawn, your neighbor's lawn at the earlier age? I did. Yeah, not just lawns. I shovel the snow as well in Canada. You know, in Canada it gets so cold in winter, right? You get up in the morning, the snow is like yay deep here. And if you don't shovel the snow, there's no way you can get out. Right? So sometimes you contract with the company to shovel the snow for you, or sometimes you don't. All right. So there's also, we talked about earlier, lawsuits, law firms. Each case can be a job, right? Okay, each. And also, let's say web design or designing a logo, right? They start at certain time. There's certain resources you can track, right, towards that job. So these are example of a job as well. But even production lines, like making airplane, right? It can consider job as well. You are making a batch of airplane for Air New Zealand, or batch of airplane for, say, that for United Airlines, right? So like recently they have this trouble with the Boeing 737, right? Okay, so there's several batch that they made, the modification made to that airplane, and they hide some information, so make sure. And what happens to the airplane is that the airplane have the difficulty determining what the angle of that airplane is, right? And the The problem is that when the airplane is a wrong angle, right, the airplane is supposed to let either the pilot know or let pilot control to correct it, but that part was broken. So the airplane keep going down, and that was a big issue for Boeing. And Boeing right now is still trying to recover from it. And so, or even things like this, right? When you go to a car shop, right, and you ask for oil change, it's a very distinct service. You know that there are several quarts of oil going to the car, and then how much labor hour is going to do this job, right? So we have a fairly good idea how much resources consumed, right, in order to complete a particular job. So the idea for job costing is indeed this. So if we have a job, a specific unit of service, or specific batch, okay, of a product, then how do we account for the cost? Right. So characteristic of job costing considered first is what we see as a job shop. Okay. The job shop idea is, you can think it like visually, oh, a shop, a mechanic shop or whatnot. But the job shop, the idea, when the accounting, from the accounting perspective, is a place that track all the documentation, all the cost flows, right? And that's what the job shop do. A firm that produces work through job is a job shop. The shop consolidates the accounting records. So it is possible that you have a company, right, and have several locations, right, but only one place that collects and consolidates all the accounting records for things going to that job, and that will be considered the job shop. Okay, so things like, oh, I'm going to make a movie, right? And there are several direct costs and indirect costs and overhead that goes into this job. And we have an accounting department that tracks all this, and by definition, from our perspective, that's where the job shop is at. Okay. So job shop, what it does is tracking resources used in a particular job, right, is crucial in job costing. So complications in job costing often comes from overlapping jobs and from allocating shared manufacturing overhead or management overhead. Consider this. If you have a law firm, and if you're running a law firm, there are 10 lawyers, 20 paralegals, right, and some, let's say, janitors to clean up things, and you have electricity to pay for, you have the rent to pay for, right? So there are several simultaneous jobs in the same time. Then how do you allocate, okay, a particular cost, let's say electricity to a particular job, or the janitors to a particular job, right? If we consider the job has a definitive start to end time, right? There are resources we can track logically directly to that job, but some are shared. Or in the same time, its problem is that when you have overlapping job, right? When you pull into a mechanic shop, right? The mechanical shop, it does not repair just one car, right? There are several cars in the shop, right? In the same time, right? And how do we allocate the cost? How do we track the hours spent on each job, right? That's usually where the complication of job costing starts, right? So the job costing is very unique from company to company. You need to determine what is your product and services, and how does the cost flow for a particular product and services. Oh, I need to hire people. I need to do some research. Yeah, I need to put them together, and I have to sell them. Oh, okay, that goes to this job. Oh, I need to determine, I have only one mechanic working for 3 cars, right? So I have to determine how many hours of this mechanic's time is spent on this car and on next car, on next car. So that's where some of the complication of job costing may come from. So how do we track all this resource usage then, it's what we use a device called a job cost sheet. A job cost sheet can look like this. Oh, let's say this, for this example, is a design shop, and there's a job number 0101 for the customer, BANC 25, the start date, the date completed, the description of this, and the track of resource usage. The direct material, we use this. The direct labor, we use this. The overhead, we use this. And the total cost of this. So that's what we call a job cost sheet. And the job information on job cost sheet is very different than what you will give the customer as a receipt. Why? Why would you reveal your costing information to the customer? No, right? But we still need the information in here in order to figure out what this job meant to us cost-wise, right? So based on this information, then we can determine how much we're gonna charge, right, our clients, right? But we don't necessarily need to reveal every information on the job cost sheet to the customer. Like, any of you guys ever seen how a law firm work? How a law firm sends its bill? Oh man, it's amazing. You know, you pay for hourly rate for the lawyers, like $500 per hour. Who makes $500 per hour? Oh my God! Right, and then they charge you every piece of paper copied, right? And they charge you for everything that mail, or you use FedEx service to send the document to the court. They charge you, and not only they charge you for the actual price. Use a FedEx service, they charge you overhead on that as well, right? Management overhead, sending material. It's amazing. And when you add it up though together, you're looking at a bill, what, like $20,000, $30,000, easy, you know, law firm. Then accounting firms work very similarly, you know. We are just as bad a lot of times. So when it comes to applying the manufacturing overhead, hey, earlier we have learned a technique, right? We calculate the per hour allocation rate, right, based on some number. So in job costing, the idea is that, oh, we don't know how many hours we're gonna spend, right, on this job. So we don't yet know, okay, during this 3 months of time, how much money we're gonna spend, how much labor hour we're gonna spend, right, on this particular job to defend this notorious client, right? We don't know. Or how much audit hours we're gonna spend to audit this particular client. We don't know yet, but we still have manufacturing overhead or management overhead to allocate, right? We still keep paying electricity, right? We still keep paying our janitors. So even when the job is progressing, right, we have to figure out a way to allocate the cost, to write it down that way before the job is completed, before all the costs are compiled together. So the information that we use is usually based on prior information. Based on last year, oh, we spent so much on electricity, we spent so much on janitorial services, on security services, all these overheads. And based on the hours that we spend, the total hours, we can spend like 100,000 hours total, right, for our clients. So use that, we can calculate the per hour allocation rate to help us allocate the resources spent on each job. But then the problem is this applied rate may not reflect what happened in the reality. So that's what we're looking at here, applying the management overhead. So in job costing, the application of MOH can be complicated due to the use of a predetermined allocation rate. Earlier we discussed this, right? We use last year or last month information in order to calculate what we done in last hour, the per hour rate, okay, to allocate, let's say, direct labor hour, right, MOH is applied. Okay, if we spend 10 hours on this lawsuit, or we are applying $40 per labor hour to allocate the manufacturing overhead, right? But the problem is this predetermined allocation rate may not reflect truly how our resources are spent in reality when we are doing this job, right? We are paying rent, we are paying security guard, we are paying various overheads, right? So example, a car repair shop may use direct labor hour to allocate the manufacturing or management overhead, but actual expenditure may differ from the allocated rate. So there can be difference between how the MOH controlled account and controlled account records the actual expenditure you incurred during the period. Oh, we pay this special consultant to take some pictures of the husband, right? Having a romantic dinner with this woman here, right? So you have some additional expense that you incurred that go into this MOH controlled account, but then the hour you spend on it is applied using a predetermined rate, $40 per labor hour to allocate the MOH. So let's take a look at from our workshop view. I can't find my pen. Okay, over here. So idea is here, we have MOH control account. This control account tracks actual resource expenditures. And we have an applied account. Applied MOH account. So if on the controlled account, we said we hired janitor, right? Janitor's $800. We hired a photographer. $2,000, right? And we pay for utility, $300, and things goes on and on, right? But the problem is when we are working this case, we do not yet know what the MOH is going to be. We do not yet know how many hours we're going to spend on this project. We do not yet know. But what we do know is based on prior information, we can apply the MOH onto the account. Okay, let me see. Let me make myself smaller workshop view. Okay. We can apply the MOH using a rate determined. So if we have spent so far, let's say 100 hours, okay, then we can apply these, okay, use 100 hours and at the predetermined rate. So if this comes down to 3,100, right? And we use a rate of $40 per hour, labor hour MOH allocation. So based on this 100 hour, we are applied MOH. We have comes down to $4,000, right? Applied MOH. So now you can see that there's a difference between the actual that we recorded the MOH controlled account and the applied MOH account, right? So the issue that we have to work here in this particular instance is how do we consolidate this, right? We have over applied, right? Or sometimes you may say $30 based on prior information. Now we only have 3,000 here. In this case is under applied. Right. Okay. So the idea here you have to make yourself absolutely clear is the definition of over apply and under apply. Students usually make the mistake, oh, they do not understand what the over apply mean or under apply mean. So in under apply means that the information that you use to apply the MOH, right, is not enough to pay for what is actually incurred, right? MOH, right? So situation like this, what will happen if you continuously to under apply account use information? Let's say job 1, job 2, job 3. The job 1, right? All the overhead comes to 30,000. Job 2 comes to 24,000. Job 3 comes to 20,000. You see all the MOH, the overhead added up, the manufacturing overhead, it comes to $74,000, right? That's the control account. Okay. And then on the other hand, if you have the applied account, right? Job 1, you applied the MOH only at 25. Job 2, you applied also 25,000. Job 3, you applied $18,000. Okay. Why? Because job 1, job 2, you may spend exactly the same amount of hour on it, while job 3, you spend less hour on it, right? But if you add it up together, right, you find out you have only 68,000 here, not enough to pay for what is actually incurred in your control account. What to do? So you are actually losing money, right? Because you have not applied enough costs. So that's usually not the problem. Okay. So what we usually have to do is consolidate them, right? And make sure that they can be balanced. So for example here, the manufacturing overhead account, the control account comes to 51,450, and the applied overhead based on the rate that we determined and perhaps the hour that we spent so far, which comes down only to 49,000. Oh, we're short. We're short $2,400. What to do, right? So in this case, this have to balance that. But sometimes students make the misunderstanding that, oh, we didn't budget it right. This has nothing to do with budget, nothing. But what we are looking at is only a way to allocate the overhead and consolidate the difference. It happens in every job costing because when we apply the overhead based on our rate, it will definitely make a difference, right? Between what is actually happened, right? It's nothing wrong with the budgeting process, nothing wrong with anything. This is actually a fact of life, right? We just see this for every job. Okay, so for under applied, what does under applied mean? That means the applied MOH is less than the control account that tracks resources. That means not enough to pay. So the question is, who pays for the difference? What do you guys think? Who pays for the difference? Can Should the company just write it off and claim it as a loss? Oh, we made a mistake. Yeah, it's our applied allocation rate is not enough to the actual the money that we actually spent, and so we'll eat it. We'll eat the bill. Do you think company would do that? Anybody think that company should do this? Right. The lawyer said, right, it's gonna cost 24,000, but actually the resource spent is 25,000. So what's gonna happen? So the lawyer will eat that $100 difference, $1,000 difference? Nah, right? No, it's only if. No. So what you do here, as you can see, in journal entries, what happens here? You debit to the cost of goods sold. So who's paying for this? The customer again, right? Yeah. Okay. Because you debit the cost of goods sold, so you make this account the overhead control account and applied account balance. Right? You debit the cost of goods sold. Okay. So when allocating over and under applied overhead, right, can be prorated into the applied account. It's very easy this way. So let's say, okay, you have $2,450 to be allocated, right? You can prorate it using proportional method, right? How much this should be applied to this, how much applied to this, how much applied to this. So the calculation method, it's the same what we did last hour. Okay, what's the proportion? Let me get on my workshop view. Okay, of 2450 should be allocated into 3 accounts. ACCT1, account 2, account 3. So what we see here is 2450 times 8,000 out of 49,000. That is for account 1, or 2450 times, that will goes to account 2. Goes to account 3, right? Proportionally allocate to each job, right? Okay, you see how it is done? It's no different than if you take 2450 divided by 49, right? And this, if you use a percentage representation, you get 5%, right? So 5% of that 8,000 here is 400. And 5% of this 35,500 is this. And 5% of 5,500 is this. So in this way, you allocate this $2,450 into various, okay, stages of the job. All right? Okay, you see how it works? Okay. So when you do this, the chapter from like chapter 7, chapter 8, and chapter 9, always try to focus, try to go back to chapter 6, right? Because the basic knowledge, basic information that you learned in cost allocation, right, it's going to be used over and over in this situation. All right, let's go back to lecture view. So earlier what we used to talk about is a percentage of total cost method, right? And you can allocate it that way, the percentage of the total cost. Okay, see the total cost here. Okay, out of this total cost, what's 77 represent? Out of this, what is 0.08 and 500 represent, right? So that is the percentage method. It's very similar to the proportional method as well. Okay. Right. Okay. So job costing in service organization. Okay. Job costing method is very, very commonly used in all service industry. For example, architecture firms, consulting firms, or various gig economy services, right? A job for delivery, a job for walking a dog, right? You can use job costing method to calculate what each job cost to the firm or cost to for you to perform. And accounting service, of course, is one of the area that we use a lot of job costing. So the main concern for the service organization is that the all fixed and variable costs of the firm incurred must be allocated to the job. They must be, otherwise the firm will run into deficit. You see, earlier we already discussed, right? You run a law firm, you got to pay the rent, you got to pay the lawyers, right? That would be considered part of your fixed cost. But on top of that, you have a variable cost running each job as well. So from the accounting perspective, the problem then comes. What if I don't have enough job to pay for the dough, right? What is the right way to allocate the cost? Let's say I only have one job, right? I should have 10, right? Can I allocate all my fixed costs to that one job? Would that make sense? May not. You see, maybe you, as an accountant, you have the motivation to make sure that your firm stay afloat, right? But if in a downturn, economic downturn, right, you just simply don't have enough client or enough jobs, right? You can't simply pass on to this cost or to a job. I'll say regularly we have 10 clients to split, right? The cost of our rent, of our employees, right? But now we only have one job. So I'm going to dump every cost to that one client. Do you think that makes sense? No, right? Because in the long run, you won't be able to stay competitive, right? Because the rate that you charge is way too high, right? Compared to other competitors, right? Okay. But some service organization may adopt a different method of job costing. Pardon me? And so sometimes the service organization will adopt a method, a hybrid of job costing is, okay, pay me a retainer to retain my service or subscribe to my service. And based on the subscription fee, and I can perform X amount of tasks for you, right? Above and beyond that X amount of service, then you pay me extra. So by doing this way, the service organization can make sure that their account stays more stable, so less influenced by the actual job they're performing, right? The variation from months to months, right? You see? You see how it goes? Yeah. So even if you have like one job, right, but you have 10 clients that are paying you on a retainer or subscription fee, right? So you don't need to worry about that, to dump all the cost onto one client only, right? Okay. So that idea gives to the segue into this one, the normal costing versus actual costing. So normal costing means that the cost of a job is determined by the actual direct material and actual direct labor plus overhead applied using a predetermined overhead rate, right? Using the actual allocation base, right? So that's what we call normal costing. We're using the actual direct material we spent on this account or on this client, actual direct labor, and plus the overhead when we apply it into using a predetermined rate, right? We use $40 because $40 is the best number we can get based on last year's information, right? and times the actual allocation base. If it is direct labor, we actually spend 100 hours, right? So the thing here is what we are using is a predetermined overhead rate. But when it comes to actual costing, okay, we are using the actual DM, actual DL, plus overhead applied using actual overhead rate and actual allocation base. It can be done, but the trade-off involves the speed, convenience, and accuracy. Because if you have to wait for the end of the job, right, to find out exactly how much hours you have spent, and not only that, you have to wait for the end of other jobs, right? And other job, you may have to wait till the end of the year to determine how much time that should be allocated to each job, right? Can your client accept this? You send in an adjustment bill at the end of the year? Most likely don't, right? Okay, so normal costing, even though that we are using predetermined overhead rate versus the actual costing, we use the actual overhead rate. The difference is that actual overhead rate can be difficult to calculate, right? Because you won't reach that number until you have consolidated every job and every information you have in your hand in order to determine the rate, right? So far so good? All right. So there are some ethical issues in job costing, and it's quite common in accounting, in law firms, in mechanical shops. First is the misstating resource usage, right? The DM and DO used can be manipulated. Oh, actually you spent 1 hour on this, but you claim that you spent 3 hours. This happens a lot in car mechanic shop, right? The mechanic is working on 3 cars in the same time, right? It claimed that I spent 1 hour here, 1 hour here, 1 hour here, right? That should be 3 hours. But actually, no. This hour, he just walked around the 3 jobs, and maybe perhaps he only spent 20 minutes here, 20 minutes there, 20 minutes there. So it is very, very common that the direct material and direct labor used are manipulated. And also the percentage of completion, earlier we discussed, can also be completed. This happens a lot in the construction industry, right? So what happens in the construction industry at the end of the month, that you send the client a bill, right, based on how much you have completed, right? But a lot of times the project manager may try to manipulate the percentage of completion in order to get more money earlier, right? Also, the charging the wrong job, right? Okay, you have the use resources from other job to avoid the appearance of cost overrun on another job. It happens quite often, right? Each job has assigned material, assigned resources, right? You can only spend like 10 hours on this job, but now you're charging another job, right, for additional services, right? Okay, so instead of charging the right account, you're charging another account for it, right? Charging to the wrong job, and charging the wrong job can lead to something we call the Ponzi allocation. It's very similar to the Ponzi scheme that you see. But what happens is that you're always using another job, next job, next job, next job to fill the hole of what you're doing here. It happens a lot in, say, the production, movie making, or studios like that. They keep charging the next account, next account, next account to fill the budget overrun for this particular job, right? In the end of the day, right, the things will come out in the open, that we keep charging, right, the next job to fill the hole of budget overrun of this job. Okay, also double counting, okay, is a popular way or the misstatement method in job costing. So what happens in double counting is DL, direct labor, or accounts are double counted using a different account name to inflate the applied overhead. What happens is that, okay, so you said, oh yeah, I charge for per copy, right? And you said you may challenge the law firm or the accounting firm. Why are you charging me $3 a copy? Right? I can just copy that somewhere down the street with 10 cents a copy. And law firm will usually justify, oh, that's because we apply overhead. You actually need a human, right, to do the copying machine. So therefore, it's a $3 per copy because we are applying the labor rate inside the copy. And yet somewhere else, they are charging the labor hour again. So they double count that labor. And in job costing, the things like this, okay, double counting certain items is very, very common. So if you want to be let's say, a inspector general, an auditor, a forensic accountant, like audit big jobs like making an airplane, F-35, you deal with this type of issue very often to find what something being overcounted, double counted, or charged to a wrong job or misstate resources usage in a large job contract. And in large job contracts, mistake errors like this happens very, very often. You know, because there's just too much information to track, right? Say if you want to make 100 F-35, right? The resources spent in there is phenomenal, right? And how much, right, is the contractor supposed to allocate their cost to this job, right? Or it's something supposed to be eaten by themselves, right? That's usually up to debate. So that's some of the ethical issues in job costing. And the last one is what we call the cherry picking the allocation rate. Sometimes you can cherry pick it to give you the best result. Right. The allocation rate change to favor the financial rather than reflecting on resource usage. So company may always try to cherry pick the best rate that will give them the highest applied allocation, right? So they were constantly showing, oh, we have over applied the MOH, but they don't tell the client that they have over applied MOH. Because when you under applied, you charge to the cost of goods sold, but when you over applied, a lot of companies just, okay, yeah, we over applied, so we over applied. They just write it to revenue instead of the give the money back to the client. All right. So that's the end of this chapter. So we will come back and do some practice questions if you still have the energy for it. But you don't need to stay for the workshop. Okay. If you want to leave, it's totally fine. The lecture has ended. If you want to practice yourself, it's fine. But if you want to do it with me, come back at 9 o'clock and we will do the workshop. Is that okay? All right. 马家杯子，马家杯子。 Are you guys able to read the numbers on the screen? That's a problem. Yeah, you can do that. I really prefer that you can see it on the screen though. Yeah, let me see if I can make it bigger. Hold on for a sec. Is this better now? Okay. Well, let me adjust it. All right, so do I need to? I don't think I need to show my face here. All right. Okay, that would work. Okay, let's come back to class and start doing the workshop. So before we start, how do you guys think of the class so far? Is it okay? All right. Good, good, good. Really? Really? Takes that long? Oh, all right. Mm-hmm. Mm-hmm. All right. Okay. I will take that into consideration when I assign the midterm. Yeah. Okay. So let's start with this question here. Let's read it together. So Tiger Furnishings produces two models of cabinets of home theaters components, the basic and the dominator. So data on the operational costs for March is as follows. So we take a look at some information here. Unit produced. Let me see. Okay, and there's machine hours, the direct labor hour, okay, the direct material cost, direct labor cost, manufacturing overhead cost. So the required is compute the individual product cost per unit, assuming that Tiger Finish used direct labor cost to allocate overhead and the product. So the usually the reason why students find it so slow, takes so much time to complete a question is because that they are not familiar with the question, so do not know what the question really is asking. So what happens in that situation is that students are swimming in the question trying to find what is the number I should use here, and what this number is relevant and what is not relevant, and this and that. So the best strategy to answering this kind of question is figure out what the question is asking first, right? So they are asking the required is the unit cost, the cost per unit. All right, so in your head, you know, okay, I have to allocate the price, the cost information into these two lines of product, and what I want is a costing information per unit of these two lines here. So when you look at this here, you pretty much figure out first what are the costing information involved in here. So you see the unit produced, these are unitized information. And okay, it's not dollar. Machine hour, not dollar. Labor, direct labor, not dollar. So when we start looking at pricing information or information that related to dollars, we start from direct material costs here and direct labor costs here. So the way to answer this type of questions and or any type of managerial accounting type of questions is to prepare a pile or blank piece of paper beside you, right? Don't try to figure it out on screen or use the table that it gave you here to fill out the information. No. Right? Fill up, make your own table, right? Make your own chart to do that. So what we're doing here, we track DM. Okay. We need to track DL. We need to track manufacturing overhead, right? So we know that this manufacturing overhead needs to be allocated into two product line, which is the basic product line and the dominator product line, right? Okay, that's what we're trying to find out. And the MOH given to us that need to be allocated, we know is 175000, right? So we know the 175000, some of this have to be allocated to basic and some of this have to allocated to the dominator. And the information that they provided, right, based on the question here, they want to find out the per unit costing information. So here we have to figure out the per unit cost, right? So somewhere down the road, we know this have to be divided by the unit produced, divided by 250, right? So you started to structure your work somehow, right? Do not just attack the question one by one. No. Make a structure, right? So you can take a bird's eye view what you are doing. So that's usually the best way to do it. So now I have a structure. I take a look at DM. It's 10,000 here. Put a dollar amount. And the dominator is 3,750. And direct labor is 64,500. And over here is 3,500. Oh, 3,500. Sorry. Erase that. Okay. So now when it comes to allocate this MOH 175002 different kind of product line, let's see how would they like to allocate, what's the allocation base they assigned us. So compute the individual product cost per unit, assuming that Tiger Furnish used direct labor cost. Right? So where do we see direct labor cost? Right? It's the way to allocate. Right? Do you guys see that? Direct labor cost? It's not direct labor hour. No, we are not using that. We are using direct labor hour. So, we are not using direct labor hour. We are using direct labor cost, which is here, 100,000 total, right? This here and plus here, $100,000 total, right? Did you guys see that over here, this line? Direct labor cost, this line? Okay, so if we use the proportional method, we can do it this way. Over here, we have 175,000 times what? 64,500 out of 100,000. And over here, we have 175,000 times 35,500 out of 100,000. That's the proportional method, right? Or we can use the unitized method. We take 175,000 divided by 100,000 over here, right? The total units, right, of this 100,000, the direct labor cost here, that would give us a rate of 1.75 per dollar, right? Allocation rate. So now it's easy. We can either use the proportional method or we just use the unit method. 64,500 times 1.75, 35,500 times 1.75. Okay, so if we have a calculator and we can figure it out very quickly, this comes down to 187,375, and this comes down to 101,375. No, it's not. Sorry, I saw the wrong line. Okay, over here, this comes to 112,875, and this comes down to 62,125, right? 64,500 times 1,745, and here is times 1.75. You come to this price, right? And you add them up together. That will give you DM plus DL plus MOH, and draw a line. This comes down to 187,375. This comes down to 101,375. And you run the division, we already said earlier, divided by 1,000, 10,000. What's the unit count here? 1,000, right? Unit produced. And this divided by 250 unit produced, right? Then this will give you 187,375, right? And you move the information about it comes down to here, 187,38. this comes down to, adding up together, divided by 250, comes to 40550. So that's the information you're looking for, the answer. All right, so if we clean this up, again, right, so now we see a question how this is done, right? So when it comes to allocation method, when it comes to whatever allocation, it always will have information into track. DM, DL, MOH. You always have to track this. And various product line A, product lines B, product line C, right? And you start filling out the information. Right? Direct labor, MOH, and then you can write allocation base here. Then you can allocate the MOH based on the allocation to the 3 accounts. Then you figure out how much is to be allocated. Right? Did you guys see the idea? Don't just dive the problem right away. Figure out the structure, right? How you want to look at this in the bird's eye view. With the allocation problem, it's always structured like this, always. There's no exceptions. You always have to DM to worry about, DL to worry about, right? And remember when we talk about the structure, last time when we do the cost of goods sold schedule, remember? I asked you to do a structure of DM, right? WIP, finished goods. Figure out the structure first, then you can fill in the information quickly. So look at the questions from the bird's eye view, right? Okay, so when you're practicing the questions, right? That's what you're looking for. Okay, how do I make sure that I understand this? So instead of just dive in, try to figure out number one by one, can I make it more readable to myself, right? So I can take a look at the problem as a whole. So it doesn't really matter how many questions they are asking here, because a lot of times when students get panicked is they have require A, B, C, D, E, a bunch of things out of one question, right? So, but if you have a bird's eye view information of your costing information, right? Then you structure it your way, and it's easier to do it, to find the information, then you do it linearly, or one by one by one by one. Don't do it in a linear fashion. Right? Try to structure it in a way that you can understand. Right? Good. So let's see. Any problem with these questions? All right. Do you want to go next one? Okay, so let me see how do I get to the next one. Oh, answer previous question to unlock. It's so annoying. All right. So let's take a look at this question here. Again, there's a lot of information on this question. So let's read it carefully. So our eye radiologist, OR, does various type of diagnostic imaging. Radiologists perform tests using sophisticated equipment. OR's management want to compute the cost of performing tests for two different type of patients. Okay, those who are hospitalized, including those emergency rooms, and those who are not hospitalized but referred by physicians. Okay, the data for June for the two category of patients is as follows. So we have one column here, the hospital patients, and the other patient come from referral and the total cost. So we have this units information here, units produced, equipment hour used 240, 120, and the direct labor hour used 480, 180, right? The direct labor cost, right? Including here, and overhead cost 49500. So when you look at this, you already know, right? What do we need to allocate over here, right? The overhead cost. We don't know how much that goes to the hospital patient and how much goes to other patients. So at this point, it's kind of clear already. And this is the type of question that we need to allocate the overhead cost. And same thing here. We have direct labor hour and the direct labor cost here, right? And we have equipment. What we do not have this information here is material used or other type of MOH that goes here. So more information to follow. So okay, so the accountant first assigned overhead cost to two pools: overhead related to equipment hours and overhead related to labor hour. So it's the same thing that we discussed in class. Two cost pools. One is labor intensive, one is machine intensive. So the logic dictates that it most likely that we're looking for a two-stage allocation issues, right? And do you remember how we separate that? We said that we need to separate the cost into two cost pools, right? The machine cost pools and the labor cost pools, and they have given us that information here, right? Related to equipment hours, related to the equipment hours, related to equipment hours, and certain costs are related to labor hours, related to labor hours. So at this point, you may want to look back a little bit. Oh, do we have that information, right? What gives us the equipment hours over here, right? We do have that information here. So out of 360, hospital patient consumes 240, and other patient consumes 120. It's fairly straightforward. And for labor hour, hospital patient consumes 480, other patient consumes 180, and total comes to 660. Right. Okay, so pretty quick in our head, we have how the cost should be allocated, right? Right. So what I'm asking here, required A, compute the predetermined overhead rate, assuming that our eye radiologist uses equipment hour to allocate equipment-related overhead cost and labor hour to allocate labor-related overhead cost. And B, they want to compute the total cost of production and the cost per unit for each of the two types of patients undergoing tests in June. So they are asking A and B here. So what I see here, complete this question by entering your answer in the table below. Required A, equipment related overhead rate. You see that? First, they want the rate per hour. Okay. So in this, we already kind of in our head, we know. Okay, they want a rate for equipment pool and want another rate for the labor related pool. And required B is they want to see the cost, total cost for hospital patients after we allocate it the MOH using the two-stage method and divided by the cost per unit, right? So do we have units performed? Yeah, here, units produced, 640 and 860, the units. So we will use that information for calculate the unit cost, right? So let's work on A first. So let's lay out the problem. In this case, we have no direct material to worry about. So we have direct labor for hospital patients and then other patients. Okay, so direct labor cost here is 38400, and the direct labor cost for other patients is 10800. And overhead cost we have is 49200. Okay, and this is to be allocated into two patients, right? Type of patients. But the problem is we need to find the pool, machine related pool, and the other one is labor related pool. So that will give us the opportunity to break this 49200 into two pools, right? So let's do that. Let's add this up together here. So equipment related pool, 4800 plus 8400 plus 3360. How much would that be? Is comes down to 16560, right? And for labor related pool comes down to 33000, right? And then we know how to allocate this is based on machine hour, and how to allocate this is based on labor hour. So machine hour, now we will allocate it this way, 16560 times, if we were to use the proportional method, let's take a quick vote here. Which method do you guys like? Proportional method? Do you like proportional method? Or do you like a unitized method? How many people like unitized method? No, there's no right and wrong answer. People like different things. Like some people think proportional method makes more sense, and some people think unitized method makes more sense. It doesn't matter. So let's take a look at machine hour used, right? So this is 240 out of 360, right? And over here we have 16560 times 120 out of 360. Proportional method. All right, and here we have 33000 times 480 out of 660, and here we have 33000 times 180 out of 660. Okay, so that gives us the proportional method allocation rate. Or to calculate the unitized method, it's very easy, right? So let's get that information here. MR rate is 16560 divided by 360. That's the total hour, right? And the second one, the labor related rate is 33000 divided by 660. And this gives us what, 46 per hour, and this gives us 50 per hour. Can you see that? Okay, that's the unit per hour rate method. Okay, so what were they asking? Require a overhead rate, right? Equipment related hour, this is 46. And the labor related, that's 50. Very easy. Require B. The total cost. Let's come back to the total cost. Over here. Okay, if we calculate this out, and calculate this out, calculate this out, calculate this out, and on top of that, we add to DL for this, that will give us the information of this comes to 73440, and this comes to 25320. Right, it's very easy, just add these 1, 2, 3. Add 1, 2, 3 together, you get this. Add 1, 2, 3 together, you get this. That's the total cost, right? So how do we find unitized cost? Divided by the unit that need to be accounted for. Where are the units here? Units produced, 640 and 860 units. Okay, that gives us the whole answer. Right. It's pretty fast, you know. It take me like 10 minutes to do one question. On top of that, I explain very, very slowly, right? It doesn't take 40. Come on. No. I do it very slowly, so it still only take 10 minutes. So that we started at like 9:10-ish, and so 10 minutes for question, 10 minutes of question. Did you guys see the trick that I do here? You know, give you a big blank piece of paper and just structure it out. Right? So you always have a bird's eye view what you're looking at. The practice of accounting question, this is how you practice. Make your information readable even to yourself. Okay? You know, one of the major problem for an accountant is that the accountant can't even read their own report. So what am I doing here? Right? Yeah. See. All right. Okay. You see the structure again? The costing information that's already given to us, and then the overhead need to be applied, okay, or assigned. And then in this two-stage problem, we cut this into two pools. The machine-related pool and labor-related pool. Right? And in machine-related pool, we find the allocation base, and then the allocation base and allocation base. And when we look at this, we know mathematically speaking, this is the same as calculate the unit rate, right, divided by the 360 and then times 240. That gives us the same exact answer mathematically, right? Okay, so we know when this number divided by 360 gives us this per hour rate. Right? And when we tally up information here, 1, 2, 3, we get the total cost. Right? And then total cost divided by unit. Units here, unit produced. Over here on this side, right? 640 A60, yeah, total 1,500 units. Yeah, we got that, right? So you don't need to worry things like this. If they change to other allocation method, if they were to change to, let's say, using units as allocation base, and you can just quickly change this information around, right? You should not have problem. Okay, so far so good. Right, so what did you guys learn? Structure it correctly, right? So don't just dive right in and start writing numbers down, that you will lose track. Even yourself, I forgot what am I looking at, right? So make it a chart and track the information. So let's do that here. Right, D M D L M O H, right, and A B and the allocation, use some kind of rate or proportion. Okay, if you need to do two-stage, make sure you cut into the two pool. Pool A, pool B, and pool A has its own allocation method. Pool B has its own allocation method. So that gives you a two-stage. Right. So once you understand the structure, even if the question throws you a curveball, let's say 3 cost pool to allocate. Pool C, right? You are not afraid. So what? I already know the structure. Right? Here you go. Right? Give me different cost pools, I can still handle it. Because you know all the pool ABC adds up will be this MOH here. No, we're just separating it out. All right? Okay, well, I'll give you some time to write down. Good? All right, let's, okay. I didn't write the answer down. Total. All right. Okay. Let's see, move on to the next question. Oh, this question is, oh, okay. There's maybe one I need to drag the screen to bigger. Let me see what happens if I drag. Oh, good. We just need to sacrifice some for the room for the whiteboard. Oh no. All right. Okay, let me make some arrangements on the screen here. All right, good. This way we have space again. You guys want to do one more, or you guys are fine? Fine, right? All right, let's take a look at this one. Okay, Social Media Incorporated, SMI, has two services for users. Tut, which connects tutors with the students who are looking for tutoring services, and Tix, which can be used to buy, sell, or exchange event tickets. For the following year, SMI expect the following results. So the users count, for Tut there are 9,000 users, for Tix there are 15,000 users, total 24,000 users. And revenue here, for Tut we have 1.2 million, for Tix that's 800,000, total comes to 2 million. And the engineering hours, 10,000 hours, 6,000 hours, total is 16,000 hours. The engineering cost, one is 240, 360 comes down to 600,000 in total. And the administrative cost here is 480,000. Right, so same thing. Looks like that over here, the administrative costs need to be allocated, right? But the information here, they give us some dollar amount, but that's revenue. That's not costing information, right? So we know, yes, most likely if they give us revenue, they probably want us to calculate some kind of gross profit, or or margin percentage or margin ratio. Just keep in mind in there. Right? When you see certain information, you kind of anticipate what the question is trying to ask you. Right. So let's continue reading. Now, one way of doing this, right? Are you guys able to print the questions? You should, right? So one way, when we did the exams or questions when I used to be in school, is we use highlighters, right? How we print it out and use a highlighter to highlight certain information to track. So if it's a dollar information, we use a green highlighter to highlight. If it's unit information, use red or yellow, different color. So you can always color code it so you won't make mistake what type of number you're looking at. Because as you can see here, some information are unit, some information are hours, right? Some information are dollar amount. It's really important that you do not mess them up, right? Okay. Right. So it says here, the companies consider using a two-stage cost allocation system and want to assess the effect on reported product profit. Haha, see, I just said it. They're going to ask you about profit. And here, right, here it is. And the company consider using engineering hours and users as the allocation base. Engineering hours over here, and users. Okay, so the justification is that the more users for one service, the more cost should be allocated to that. It makes sense. Right, let's scroll down furthermore. So engineer hours here, 10,600 and users 9,000, 1,500. Is it same as the information here? Okay, same, right? Toot, ticks, and engineering hours, 10,000, 6,000. Same information. So they just repeated that information for us, which is very nice, very convenient. Okay. So engineer hour related administrative costs, 120. User related administrative costs, 360. Oh, they even telling it up for you. Wow, how nice. Right. You see? Here, 120 plus 360 comes to 480, right? You see that? 120, 360. When they add up together, it will give us the total of this administrative costs that need to be allocated. So the information pretty much given all to you. Right. So let's continue reading. SMI thought that maybe there should be 3 types of administrative cost. Haha, 3. So they felt that some of the costs in the user-related pool more related to revenue than to user. Specifically, they revised the breakdown of administrative costs as follows. So engineering, 120. So what they did is break down the 360 into 2 pools, user-related pool and revenue-related pool. Right, so total administrative cost still counts to 480. Right. So this is the very issues that we discuss here, right? The MOH, the management overhead, now become 3 pools. Pool A, Pool B, Pool C. And in this case, Pool A is the engineer-related administrative cost, and the Pool B is the user-related administrative cost, and Pool C is what? The revenue-related cost. You see that? So let's use this structure over here to solve this problem. And I think this one, let's lay out the structure and then you try it yourself. I don't need to hold your hand to run through the calculation. The most important thing is I show you how the structure works. Right? And the calculation, you can just punch in the number yourself, very easy. So let's try to lay out the question. So we do have a cost to track over here. We don't have DM. We don't need to worry about that. Right? But we do have an engineering cost. Between toot and ticks. So the engineering cost is 240, and the ticks, the engineering cost is 360. So for that, we have administrative costs need to be allocated. Admin cost of what? 480. Right? So it is suggested to us right now, the 480 is further cut down into 3 cost pools. And these 3 cost pools are engineer hour, ENGHR related cost that comes down to 120,000. And the next one is user related cost that would be 210,000. And the next one is revenue related cost 150,000. So that gives us the basic. So we know these 3 costs over here, 1 pool, 2 and the 3, this is revenue related to the cost. The 3 added up should come down to 48000, right over here, 480. And our task is to figure out how each one allocate to tilt and to ticks, right? Based on the information given to us, this engineering hour, how do we allocate? 120,000 times engineering hour over here, right? We can use proportional method, 10,000 over 16,000, and then 120,000 times 6,000 over 16,000. That would give us the allocated cost in this category. Or we can use the unitized method. You take 120,000 divided by 16,000. That will give us the rate of calculation. Same thing, let's fill out the information over here. Downward, 210,000 times what? This is user driven, right? So user information here, we have 9,000 over 24,000. And over here, we have 210,000 times 15,000 over 24,000. And then here, the revenue driven, the revenue related administrative cost, that's 150,000 times, what's the revenue? Over here, right? Okay, 1.2 million over 2 million. Here is 150,000 divided by 800,000 over 2 million. Right, that will pretty much solve this question. Right? So you can see it again, though, how this whole thing play out. It really is by focusing on the structure. You take a look at the question from the bird's eye view, then you don't really need to worry about how long the question is. It just fall into place automatically. Right? See, 10 minutes again. Yeah. I think that's right. 10 minutes a question, right? So 2 hours, 12 questions. Yeah, that worked. And then it's like I do it very slowly, and I see I write it down and I explain it, and no, this is, you see, if you lay it out, right, it's, yeah, okay, I'll figure it out. I'll find. No, 2 hours and 2 questions. No way. You can't find people's, you can't, like really tell who studied and who didn't study if you just give 2 questions, right? Yeah, of course, if you studied, you want to be better than the student who didn't study, don't you? Of course, that's fair. Right? So, right, this is how you solve accounting questions. Don't just dive right in. It's just try to punching another numbers. That's not how it works. Just make sure that when you produce it, you can self-read it too. And then I can show you how that the answer sheet for the publishers, how they look. It's not very good. Let me show you. Where did it go? Oh, sorry. Let me show you over here. Yeah, see, that's how they do it. right? It's very difficult to read. See, that's how they solve two-stage allocation problems. It's hard to read. Don't do it that way. All right. Okay, so I think that's it for tonight. Thank you very much for staying. And if you have questions, communicate directly with me using email, phone, right, text, whatever, right? So these, like I said, right, the secret is just practice. You need to practice. The more you practice, the more comfortable you become, right? And then you should be able to take a look at problem and very quickly figure out what the question might be asking and what you need to anticipate, right, to answer the question, right? Okay. See you guys Thursday. Bye.